Good morning, all. CamelbackTrading.org coming to you this Monday morning, December 21st. And we're looking at the SPY ETF's market profile here on Window Trade. I have it a bunch of days out because we got to put things into perspective, what we are seeing this morning. As I'm sure all the sellers are getting all giddy. We were talking that the monthly was up, weekly up, daily was in balance. We also said that the weekly wasn't getting distance away from prior weeks. Was the trend getting tired? The volume was not there. Now, they're going to use every excuse in the book that buy the rumors, sell the news about the stimulus, the new strain of COVID. You can use whatever you want. Bottom line is market-generated information has been telling us that unless we got some reinforcements to the upside and got some distance away, this market would pull back. And it's only healthy. And that's what we're seeing this morning. So right now, as you can see, I know it's small, but putting it in perspective, this is a key level right here. This is the bottom of a 12, 3, 6, 14-day balance. This is right at the bottom of a 14-day balance, excuse me. We did trade as low as 358 this morning. We're 363. So we've rallied $5 off the lows with $4 from Friday's low. Excellent volume, 2.6 million, but that usually happens. Remember, anybody who is long for these 14 days is now in the water and puking it up with shorts piling on. So let's go to the other indices first, and then we'll go over what we're looking for in the SPY and ES. So here's the Russell. Here's the IWM. They were one time framing it up for 5 days. Obviously, that's coming to a halt. What's going to put them into a 10-day balance right now? It will be day 11 today. So the important level for them will be the bottom of December 8th, which is around the 187 level. That's one they want to hold. Put themselves and carve out a nice balance. Shake out the week longs and carve out a nice balance. Triple Qs. They were one time framing up. Well, I apologize. They were one time framing up 4 days. Friday put a stop to that. They're now looking to gap lower. Now, again, we're looking at gap low in all three of these. Now, don't forget, they have their gap still holding from the 14th, a week ago, which never got filled the way we did. So, again, they're coming into balance. Now, again, markets are very visual. It's subjective. You can use your balance whatever you want. If we were to come down and say hold this gap, you could say you're in a 6-day balance, including today. Some people will encompass this whole thing. Nobody's right or wrong. It's how you look at the market, how you interpret the market. Okay, so let's go to us now and what we're looking at. So here's Friday. We saw how erratic M period was on Friday. We talk about that all the time. I thought there was a good chance to price probe lower. We almost price probe higher. So it was shorts getting caught in the hole, right? We had the afternoon rally high that got taken out in M. But boy, that was right until M did what it did. As we were one time framing down H, I, J, K, and L. So all these shorts got caught in the hole, momentum buying. Once you took out L's high, momentum buying stepped in, shorts covered, and ripped right up. So now this morning, the market is just shaking out, I believe, week longs and getting shorts involved. It's going to remain to be seen how this plays out. So let's go over destinations and a game plan. So right now, this is going to be the 5th downside gap for the month of December. 47th overall. We have 127 caps for the year. 80 up, 47 down. So upside destination right now would be Friday's low of 367.02. So it's a fairly large gap. Now again, there's 75 minutes to go prior to the opening. But it's a fairly large gap as of right now. And then above that, we would have 371.15, which is Friday's high, and the overnight high is from Friday, 371.27. Now, obviously, we're going to have a lot more market-generated information prior to that. If we are to close this gap, M period becomes a huge factor, as we all well know, right? Now, that's a huge range to trade. And I'm not saying it would get traded in if we get into it. First things first, we have a huge gap we have to deal with. But if we ever got into M's range, then that's something we have to look at. So that's the upside. What's our downside destinations? Well, we're trading at right around 363. So let's start giving you destinations from that point on down. So the daily low of 365.92 is gone. Now, here's the important things, what's happening. 364.47 was a weekly low. So we are going to stop, unless we rally in the next 75 minutes and open above 364.47, we are going to stop the one-time framing up in the weekly. Then we have the other weekly of 363.26, which we're below right now also, and filling that gap at 363.12, a small 14-point gap from December 1st. We were 9 wide at 361.22 from the 30th. That would be the next downside destination. 360.66, afternoon pullback low from the 30th. 359.17, now that's another weekly low. Now I knew if you took out one weekly low, you knew the second one was going to go. But then that 359.17 one, that's one you would think they'd want to hold. 360 level, and they also have a small gap, 358.82, 35-point gap from November 24th. Now, pre-market low is 358, so we traded below that level. Very important. Now, we'll get to the charts in a minute to show you what kind of damage, for lack of a better word, is being done. But what is the game plan? Again, with this kind of volume, with this kind of volatility, you're going to get opportunities this morning. Do I want to take a short with a gap of between 300, 400, 500 ticks? Not really, because if we get an inventory adjustment, you can get smacked in the face. On the flip side, do I really want to take a long here? Is there anything to lean on right now? Right now, there's not. If we are to rally prior to the opening and we hold that second weekly low of 363.26 in that small gap, you can take a long against that. But I'll tell you right now, if that was to fill and get acceptance below it, I'd be out. Remember, you will be dealing with lower value all day, most likely. So why not let at least a period form, see how the opening reacts. We know how important the opening is if we get accepted below or above it, and see what B period brings. Do we one time frame down? Do we one time frame up? So right now, again, there's nothing firmly to lean on either side. Just it's like flipping a coin. You get up to the second updates in CamelbackTrading.org's voice channel room. Now, let's go to the charts and show what's gone on here now. So first is the monthly. Monthly is still one-time framing up. Very healthy. I mean, we'd have to take out 327.24 for the monthly to stop one-time framing up. But there are definitely a little cracks in their armor for the bulls. First one is right now we're going to be getting accepted into last month's range of 364.38. Now again, this is a monthly. We still have 10 days to go in the month. So just because we're below it by a couple of dollars doesn't mean it's over. But the more and more you get accepted lower into it, well then the more and more the odds are at some point you might trade to the balance of it at some point, which is all the way down at the 320 level. But for now, all it is being accepted into the previous all-time high, but we are one-time framing up. Remember, it takes a lot to turn around a huge ship. Now the weekly is about, unless they come back pretty strongly in the next 70 minutes, and I don't put anything past this market, but if we take out 364.47, the one-time framing up stops. Remember, we weren't getting distance, so this isn't a huge surprise. And then I think the odds of taking out the 363.26 weekly low is good too. We're below it right now. Then the 359.17 becomes the next very visual level. Remember I said any acceptance into last month's all-time high, and I don't mean just for a day or so, but any acceptance, and I said the destination would be the bottom of that, which is around the 350 level. So that's going to remain to be seen. But for now, it looks like we're being put into balance. Again, it's only Monday. It's a short week. We'll see how this plays out by the end of the week. Whether you want to call it a 3-week balance, well, it would be a 4-week balance, including today. But again, let's see. But we're back in balance. And the daily, remember, markets don't go bull bear. Even though we're going to be gapping lower by a pretty good amount, I'm just going to call this balance for now and see how we shake out. We are $1 below this 14-day balance. Remember, I said it's a small balance. For 14 days, the range was not that big. It was less than $10. And I said we could take that back in a heartbeat. Well, we're taking it back in a heartbeat. From the all-time high on Thursday to getting below this 14-day balance. Here's the one. Now, this is the one eventually you want to come back out of, 364.38. That's the previous all-time high. Any acceptance into that, any length of time we stay in there, and the odds of trading to the bottom of this 14-day balance become very good. And again, that's the 350.51 level. And don't forget, the 50-day moving average is now at 354.28. So that would be a magnet for sellers if we get acceptance into here at some point. Patience, I think, this morning is the key. Good luck trading today. Have a great day, and we'll recap at 4 p.m.